And greetings to you, value investors, day traders, stock traders, hype dorks, crypto dorks, Fed dorks, across the fruited plain. What's up, guys? All right, let's do this. Let's see what we have going on today. I know futures, excuse me, were positive. Let's see here. Oh, this is a nice headline. More Americans filed new jobless claims last week than expected. So prior to 8:30, markets were up 170 points on the Dow, and now they're up 260. Because anytime you see big filings like this, meaning more people are jobless, slash not going to find jobs, slash are unemployable, you're going to have more Fed government intervention, even though the Fed isn't the same thing as the government. So that is that. Let's see what we got today on the docket. I'm going to start with some things before I get into all the Fed stuff. I'm going to start with a story that Cash sent me this morning. Where's the Boeing? Here we go. China will need more planes, Boeing says. It's about $1.47 trillion opportunity. So Boeing's had bad news for a long time. I like this one because it's a long-term outlook looking to 2040. Boeing says that it expects the Chinese airlines will require 8,700 new planes by 2040 with valued at $1.47 trillion as commercial air demand grows. I also look at this and say, and I don't know, Alibaba could eventually do the same thing as Amazon, but they're going to need to buy planes from somewhere. I don't know, maybe it'll be Airbus, but maybe it'll be Boeing. There's opportunity in that area too, not just commercial travel. So in addition, there are promising opportunities to significantly expand international long-haul routes and air freight capacity. Boom, there you go. Long term, there is a potential for a low-cost carrier to grow further and build single-aisle demand. So I'm assuming that means like a Spirit or a Frontier, what have you. The company also said it expects China's civilian air travel industry will grow by more than 400,000 new aviation personnel by 2040, including pilots, technicians, and cabin crews. And I'm no genius, but it's probably better to employ people in this way than building ghost towns. Boeing predicted by 2040, China's domestic traffic will exceed the United States, or North America, I should say. No surprise there. I mean, they have over 1 billion people, and we don't. So that's good. Hopefully Boeing can do it. Good American company. And we'll go from there. Next, speaking about getting ahead of jobs and stuff, Apple workers are going to get bonuses of up to $1,000 in a rare move by Apple. So instead of trying to entice people to come to work, they're going to try to hold people at work. So Apple will be giving employees as much as $1,000 as a one-time bonus next month. A rare move. The last time they did this was 2018. They gave employees $2,500, and that had to do with the changes in the tax laws. So they gave their employees some of the cut. The iPhone maker will give $1,000 to retail staff hired before March 31st. Anyone who joined after that will get $500, and holiday workers will get $200 of bonuses. So, hey, that's good. I think it's interesting that somebody's trying to get ahead of it instead of playing the game from behind. So, all right, here's FedEx. So FedEx, of course, FedEx dropped 9% yesterday. Everything is very bleak coming out of FedEx, and I always say you got to look at these kind of companies to see what the state of the economy is in. FedEx don't just look at it from a shipping perspective. Look at it from a demand perspective. Look at it from a supply chain perspective. Look at it from they use everything. They use everything from trucks to planes to boats, I'm assuming. They use people, the ground delivery. They use people in the air. Then also they deliver packages that they have nothing to do with. So if there's a dip in purchases, there's going to be a dip at FedEx. If there's material issues, they can't build all of the plants that they need, all of the repairs that they need to all their machines, there's going to be a dip. So companies like this are really good to look at. I also I like looking at materials and different sectors like that. But this is a good one to pay attention to just to see where we're going. So FedEx said quarterly results were drilled by about $450 million due to labor shortages alone, notably its ground segment. The company estimated a shocking 600,000 packages across the FedEx network are being rerouted because of inability to find labor. The process bottlenecks stand to wreak havoc on the holiday season if FedEx is unable to address its worker shortage, which increasingly appears to be unlikely. Our Portland, Oregon hub is running with approximately 65% of the staffing needed to handle its normal value. Staffing shortages have pronounced impact on operations, which results in our teams diverting 25% of volume, which would normally flow through this hub because it simply cannot. Guys, I'm telling you, I have maybe 20% of my packages that are delivered by FedEx just because of where I live, and it's always late. Always late. I don't know if Chess Goals is in here, but he's a big FedEx guy, and he always has delays where he's at in Rochester, Minnesota. Not only did FedEx whiff badly on earnings, but slashed its full fiscal year outlook. FedEx now sees full earnings of $19.75 to $21 a share compared to, well, they were downgraded, so the revenue is going to get smoked. So, man, it's going to be tough. UPS also took a little hit, probably like a sympathy hit based on everybody else. Okay, let's do one more. What did I do? I already did China, right? Did I do China? No, China. China pumped $17 billion into its system. So if there's one thing that any country can learn from the United States, it's when you're in deep trouble, print money and support the system using your Fed or your central bank or whatever it is, because it's going to work out in the end. So China they pumped in $18 billion yesterday. Well, Monday, $17 billion yesterday, and this is a path to success. That's all I have to say. Let's recap the Fed's move yesterday. So the Fed had their meeting on Tuesday and Wednesday. Yesterday at 2 p.m. they released their decision and their comments of what's to come over the next 2 months. Jerome Powell spoke at 2:30. This article pulls out all of the key highlights of the article, so I'm just going to go through the ones that I liked and I wanted to talk about. The U.S. isn't falling behind on its digital currency innovation. The Fed is working proactively to evaluate whether to issue a digital currency. We haven't made a decision. We need to weigh the pros and cons. That's one thing. What's this one? He declines to comment on the potential reappointment. So his term expires at the end of 2022. It'll be decided if the White House keeps him going forward. Evergrande is not a preview to further global debt troubles, Powell says. The Evergrande situation seems very particular to China. It has a high debt for emerging markets. So the Evergrande, specifically Evergrande, I do agree. It's very specific to China. But I think we need to look at the bigger picture and say, what is the main issue here that is causing this Evergrande? It's debt and the inability to pay debt. That's what the bigger picture we need to look at as. You worry about how it would affect global financial conditions through confidence channels and that kind of thing, but I wouldn't say I draw a parallel to the United States. I don't either. I just think that debt matters, and it's going to have to matter at some point in a big way. Powell urges Congress to raise the debt ceiling in a timely fashion. Greatest quote of all time. It is very important that the debt ceiling be raised in a timely fashion so the United States can pay its bills. So guys, if you can't pay your bills, just go to your bank and just say, hey, can you raise my debt ceiling? It's very important that we raise the debt ceiling in a timely fashion so that I can pay my bills at my house. Sure. The failure to do something like that could cause a result of severe reaction, severe damage to economy and to the financial markets, and it's not something we could contemplate or that we should contemplate. I think that we can all agree that the United States shouldn't default on any of its obligations. It's kind of like of course I don't want the United States to default, but the United States has been incredibly irresponsible for a very, very, very long time. At some point, if you don't manage it correctly and you have stupid people doing stupid things, you gotta pay the consequences. No one should assume that the Fed or anyone else can project the markets or the economy in the event of a failure. So, yeah. I mean, if you've done dumb things for a very long time and printed and printed and printed and quantitative easing and stimulus and nonstop, you're going to have severe reactions. You've done severe reactions to the upside. Severe reactions are going to come on the downside. It's just the way that life works. It's a pendulum, and if you do something to an extreme to one way, you're going to have an extreme the other way. Fed Chairman Jerome Powell, taper. Okay, let's talk about the taper. Jerome Powell said on Wednesday that they tee it up to start a pullback of the central bank's extraordinary crisis monetary stimulus, saying that they could wrap up asset purchases before the end of 2022. Participants generally viewed that so long as the economy remains on track, a gradual tapering process concludes in the middle of next year is likely to be appropriate. I don't really have an opinion. Guys, smash the like button for me. That would be great. The central bank said it would not start tapering until the economy looked like it has made quote-unquote substantial further progress towards the Fed's dual mandate goals of maximum employment and stable prices. Inflation is well above 2% target. It's at like 5.3% right now. And the labor market, I'm very happy he said this, has not recovered. And the test of substantial further progress for employment is all but met. So at least somebody's saying that. I'm very happy that he's saying that because I was not going to be a happy camper if he said otherwise. Last thing. So we're going to talk about the rates. Let's just go to the dot plot. There's nothing that I could possibly say in here. So this is the dot plot. This is made up by the 18 members of the Fed committee from across the country. And they basically put their dot where they see interest rates going over the next 3 years / longer than that. So right now, 0%, 2021, not one of them sees a rate increase happening this year. 2022, it's a little bit split, but still no rate increase is the majority. When we get to 2023, that's when we start seeing interest rate ticks. So this is a quarter point, this is a half a point, 3/4 point, 1%. So the majority see 1% tick up by 2023. We're going to see. Going to 2024, we're sitting at 2%. That's according to the dot plot. And the longer range, 2.5%. I still find it shocking that the interest rate is going to be 2.5%. I think it's more. I think you're better off being around 3 to 3.5%, especially if you have insane inflation. But this is not going to do much to inflation. The market will react in that way, but will it do anything to combat inflation? I don't think so. Not in my opinion. All right, that's that, guys. Follow us on Instagram. That would be wonderful. I want to get to 2,000 by this weekend. So what am I at now? Tell your friends. Make an account for your animals. Do whatever you have to do to get me to 2,000. I am at 1,924. So I need 76 more. So tell your friends, tell your barmates, tell whomever you want to tell to just follow me on Instagram. Or just create tons of bot accounts and do it that way. I'm just kidding. All right. Let's X out of my Duolingo and China. Let's see what we got with let's see what the markets are doing right now. Okay. Still up. Looks like we're gonna have a pretty big day. Rates are, let's see, this one's for PP. The yields, potato, 1.32. That I've been reading time and time again that these 10-year rates are not going to get over 2% until 2022, which is insane. Nike reports today after the bell. Costco after the bell. Rite Aid reported this morning. They're down about 5%, almost 5%. Darden Restaurants reported this morning. They're up 4%. Tomorrow we have CCL. I know a lot of us are in CCL, so let's just keep a watch on that. And I'm excited to see what happens with CCL. I don't really care what happens to the stock price. I care what happens to what they're going to say about the business. That's going to be exciting to see. All right, if you guys want to join us on our subscription service, everythingmoney.com, $7 per month will get you in our Discord with over 6,000 people in there. It's crazy. If you want access to the software and us and tons of exclusive content, guys, book club this Friday, 10 a.m. Tomorrow, 10 a.m., Paul and I are going to be doing the book club for you guys. Chapters 3 and 4 of The Psychology of Money. Those are two great chapters. I mean, they only take 30 minutes max to read. So even if you haven't read the book, please come to the book club. It's more about mindset than anything. So you guys are really going to enjoy me and Paul going back and forth on that one. If you want to join the Bid and Ask Nation, that's the trading tier with me. $77 a month gets you that. And guys, remember these prices go up on October 1st, $28.78. If you want to do a one-on-one session with me, I did one yesterday, $750, 1 hour session with me. Talk about whatever you want, but I love talking about trading. Yesterday, I spent a lot of time doing day trading with a guy named Eric, and I think he's going to crush it. He really understands what he's doing. $10,000 for 4 hours with Paul to do a real estate consultation. And if you are doing a big property, I think it would benefit you to do consultation with somebody like that who's worked in a lot of these crazy markets. So, all right, guys, let me hit up some stocks for you, and we will go from there. Let's see here. Get Paul's dogs to follow you. He has about 1,000. I like that. Yes, we are animals. I am an Instagram whore. Okay. Don't forget about the yields. You get good after hours. You do get good after hours in the Bid and Ask Nation. Okay, Coco, MDLZ. I told you I would do it if you remind me, and you did. Good boy. MDLZ. Okay, so what we have going on here is definitely a downtrend. Let me change color. Let me change this. Guys, smash the like button, please. Definitely a downtrend moving on. I mean, listen, if you want to short, I just struggle with. So the reason I say the shorting difficulty here is that you're facing a very, very strong support level, which I just drew. And that is basically the 200-day moving average. You have a downtrend over here. You have a downtrend over here. But this downtrend is pretty much at the base of it. I mean, you're in the oversold area. So I'm not loving that. You know, Coco, I think I would look elsewhere. That's what I would do. Just, I appreciate your enthusiasm, but okay. OSTK, again, thank you for reminding me. OSTK. Good looking stock. I see a couple of issues, but it's a good looking stock. So you're trending up. That's a good thing. You got your reversal down there. Just got to get into the sweet spot. Now, over here I see issues. We're getting really high on the stochastic, there's no doubt. Secondly, you've tried multiple times to break out over the 200-day moving average, and you have failed to do so. So this goes back to the middle of August, failed in the beginning of September, basically failed yesterday. Let's see what happens today. Now, if we get, okay, I stand corrected. I'm looking at this pre-market price right here. So we are opening the day over the 200. So if you wanted to if you get an engulfing candlestick today, you can grab it, run it up to the 100-day moving average, and take your profits going into that. But this is a good-looking stock from a swing trading perspective. I'm happy that you bounced over that, and I'm happy that I noticed that. Okay, Vail, today the ex-dividend date, pre-market down 8%. Do you think it's a good buy or related to China? I have no idea. Let the dividend settle down and you will be okay. Let's see. Space. Let's do that one. I haven't done that one in a long time. I gotta put, you know what, guys? I have a voicemail on my phone from a former guy that I knew when I was in medical school. He thought he was just like every other doctor out there who just thought he was a genius in every category. And don't get me wrong, I love the doctors, but they need to be better investors. And he started shorting like crazy because he thought he knew what he was doing. The kid lost like 17,000. Mind you, he was in incredible debt. And he lost like $17,000 in a matter of minutes shorting space. But I should really fix that thing and send it out to the bid and ask. Because it's fun. He's like, I'm sitting there, I'm drinking now, and I'm smoking cigars and trying to drown my sorrows. I'm like, okay, whatever gets you through the day, buddy. All right. So if you're in tremendous debt, probably don't short. This space, I don't see a good trend on this. It's just consolidating sideways, doing nothing. Really stuck at the 25-day moving average. You did a sweet spot. You're doing a sweet spot reversal on the daily. And you're still consolidating. So for me, I'm just moving on, going to find another stock. And that's just my opinion. Next, AMD, I like. And then I'll do AAL. I want to do that one. AMD. So AMD, downtrend. So this is the classic flagpole. You had a flag, this thing ran up like crazy with no pullbacks at all. It created that flagpole. I told you guys that it was going to come right back down, and it certainly did. So this is the new support level. It dropped from what, $124, $123 down to $100. That's what happens with flagpole patterns, guys. And you're trending down now. So so you're creating a little bit of a M formation here. Let me try to I'm still trying to get used to these charts. Line. Wait, no, I gotta be here. Line. Okay, so you are certainly creating lower highs, as you can see. So if this gets a pullback like this today, you are certainly creating these M formations going down. So just like we have W formations going up, we have M formations that come down. And that is exactly what you're seeing right here. So this is looking to be a nice short. If you get a really good trajectory down, make a new low like you did over here, like you can over here. That is where I would go ahead and do a short on something like AMD. So, okay, let me pull up these bars. Okay, next. What did I say I was going to do? AAL, I think I said. American Airlines. American Airlines, we serve you. Actually, I have no idea if that's their slogan. This looks like similar to the stock one of the ones I just did. I can't remember. So you need to get moving to the top side. There's no doubt about that. Swing trade, if you can get through the 200-day moving average with an engulfing candlestick and run it into the 100, you'll be all right. But let's zoom out a little bit. Let's see the last time that AAL was able to get through its 100. So that was in July. So it's going to take a lot of volume. It's going to take a lot of volume, but you're getting it. You're definitely getting it. So you need a little bit more volume, but AAL is looking okay. Keep watching it. Okay, Nike short. So Nike short right now. Earnings are today, so please be careful here. But in my opinion, there's supply chain issues. Who knows how the market's going to react? But I think Nike's near-term future is bleak. Of course, our long-term future is great, but their near-term is bleak. Good-looking downtrend. You might have a little bit of a hiccup with the trend on the daily. You bounced off the 100, no big deal. But if you get something bad, this thing can certainly come down here. We're going to see after hours today. Please don't be in this thing. If you're trading it, just be all right. Take care, Brian. Have a great day. DKNG. Is this Donkey Kong? No. All right. So with DraftKings, you're certainly coming down. You did a reversal. So if you're gonna go, don't short this thing yet, because what we need is this. I'm gonna use different color lines. You need the red line needs to go like so. Also, the yellow line is gonna need to roll over and come like so. So it's not an enter right now. It's getting to that point though, absolutely. But we need to just be patient here. And go from there. Okay, let's do over here. So you're just stuck between moving averages. To be honest with you, if this thing breaks the 100 and starts moving down like this, short it from a daily perspective. But if I'm you, I'm just waiting for a long-term trend to come on this one. Next, A, B, ooh, let's do Roku. So Roku is going to expand their stuff into China, or was it European countries? I don't know. They're going to expand services overseas. So I don't know about you, but that's disruptive. I need to have a bell. I need to get a bell. Nicole, if you're watching, can you get me a bell? And every time I have a disruption, I'm going to ring the bell just to make sure that you wake up and alert, and I alert you in case you're not paying attention so that you can just go and YOLO the stock. Just kidding. But I do need the bell. Nicole, I need the bell. All right. Roku. So the trend is not in favor of anything. I would wait until from a swing trading perspective, I would wait until we get this into the sweet spot. Now take a look at this. So this time you were up here on your stochastic. The next time it was a little bit lower. The next time it was a little bit lower. So when you get into the sweet spot next time, be aware of this. I have never seen this before. I'm just using what I know as far as looking at patterns and saying, maybe this is a trend. I don't know. Be conscientious. Maybe the next time it creeps up through the sweet spot, it's going to get here and pull right back down. I don't know. I'm just spitballing here, and maybe I'm onto something. Who knows? Okay, not Roku, QCOM, Qualcomm. But seriously, I do need a cowbell. Let's see here. So this is your line. That's your support level. Now let's see here. Get rid of this. Get rid of this. Okay. Qualcomm. So it's certainly a downtrend. You can short this. You're going to run into the support area. It's going to be tough for you. To be honest with you, I would look at it on the swing trading side and try to grab it, and when it turns up, try to get a trade into the 100 or 200-day moving average. That's exactly what I would do, and I wouldn't look any further than that. Okay, next. Facebook to the moon. Let's see if Facebook is blasting off. Maybe Facebook was on its way to Mars, and it's just coming back to the moon. I see. Okay, so this was Mars. Let's draw it in red. This is the red planet up here. And now it's going to come back to the moon, which is down here. Okay, so this must be it. So you have a good downtrend starting. Let the yellow line move into the sweet spot as well. And if you can break through this resistance level, yesterday it closed under the 100-day moving average. That's a big deal. If you can get a little more sell-off today, this thing could easily go down to the 200-day moving average, very easily. So keep a watch on this one. I'm going to throw this on a watch list myself. That's a good idea. I like that one. All right. Next, Viacom. I haven't looked at that one in a while. I'm sure it's just as boring as it was 3 months ago. And it sure is. So it's just consolidating, doing nothing. The trend tried to, this is a dog stock. It tried to turn up and it has failed. So it's coming back down to be a doggy stock. Just keep being patient here. Just keep being patient here, and eventually this thing will work out for you. I am sure. Next, didn't I already do Micron today, or have I just seen it 4,000 times from the same person over and over and over? Let's see. So the trend is moving up nicely. It's just you're at a consolidation level, and you're really stuck below two major moving averages. So just be patient here. Let it move up or let it move down. This is going to be a very strong support level for you. That was a terrible line. Let me draw it a little bit better. That's $70. So if it gets under $70, I think you'll have some go zone. But until then, just be careful. Let's see here. Viacom and options trading equals free money. I mean, I know what you're saying. I know you're not being 100% serious, but I know what you're saying. Viacom puts / calls are very lucrative because the damn stock doesn't move. All right, Intel. Finally, Intel. I love you too, Anthony. Finally, Intel is moving up to an uptrend, finally. But you still got to be patient. Let me draw this with red and just to give you a color coding. So this red line needs to move into the sweet spot more. This yellow line needs to move into the sweet spot more and go from there. But remember, guys, you are facing 4 major moving averages. It's going to be very difficult for you. Anthony, thank you for that donation. It's going to go to the no kill shelter that I like down in South Florida. Guys, smash the like button. Let's get it 200 by the end of the show. That would be awesome. We have 2.5 minutes left, and maybe if it gets to 200, I will stay a little bit longer. Everybody's just going to start smashing the dislike. All right. Actually, that's not true. The hype dorks aren't out of bed yet. Hype dorks typically sleep until like noon, and then they come out of bed. Right. So let's see here. Hello group. Oh, Momo. Okay, of course. Yeah, I mean, this is a tough one because it all has to do with China. So this thing just needs to start moving up, and it's going to need a lot of positive volume to get going. I don't foresee this happening until you get good news out of China as a whole. That's just what I think. Pins, good question. Pins has that gap to fill, of course, and I do think it will fill that gap eventually. We're up pre-market. It's going to take a little while, and it's going to take a lot of volume, and we don't have volume right now. Eventually, people are going to start flocking to this thing, and I promise you it's going to take off. Let's see what Baba's doing. I have some puts that expire on Baba tomorrow. I'm playing with fire here. Well, actually, I want to be assigned the shares, so it's not really fire. But let's see. This thing needs to just get turned up, and it's the same thing. Everything about China, guys, is the same thing. Once you see it on days where we get bad news out of China, you get a big reaction. Good news out of China, there you get a reaction. People insults people still in bed. Me, I get out of bed. That's funny. Evergrande shot up. Is Evergrande a public company? I have no idea. All right, Fedex. Let's look at Fedex. So Fedex is completely gapped down. Stock market's open. They're certainly in a downtrend. They got a lot of negative sentiment against them. What was their volume yesterday? They had a volume of, what is this? Where's the volume? I don't even know where there it is right there. 17.9 million trades yesterday, which I'm sure is a lot for them. Okay, let's see. Oh my God, Jay, what an epic comment. All right, I'll do 2 more. I'll do 2 more stocks. Let's see. Love. Let's do Southwest. I think somebody asked me about this yesterday. Anyways, trend is looking like it's trying very hard to turn. You have a good uptrend going like so, but you're going to run into the 100 and 200-day moving average. And the fact that the 100 has just crossed under the 200 is probably not the best thing for the whole stock. You are consolidating, but it has a lot of room to run. It's kind of a 50. Let's see if this is any 50%er. Where's the 1 year? 1 year. No, I want 1 year here. 1 year. It's not really a 50%er, but I mean, you do have resistance that you're going to face. This is your 50% area. So this looks like a 50% stock, but it's not really because you need a year's worth of data to really create the negative pressure on it. But you have it, so you need to be conscientious of it. More so than the 50% rule I would be concerned about is these moving averages right here. So looking good. Just be patient and we'll go from there. All right, let's do 1 more. I did AZO Monday. I did Snap Monday. Give me another stock. AMC, I don't want to do that. Give me a good one. Oh, PayPal. Good one, Horace. Let's do PayPal. So with PayPal, yeah, I'm a big fan of this one. This is always a really good chart to trade with. This is a really good chart to trade with. So I need an uptrend a little bit more. So I want this. This trajectory that we have going up right here, that's what I want to see. And we are not getting that yet. Now from a daily perspective, I'm loving it. Give this thing like maybe Wednesday next week, Tuesday next week, something like that. I think you'll probably get enough volume to blast through these moving averages. You're just consolidating. But remember, Horace, when you get up into this area where you have all-time highs, it's gonna be very difficult for you, as you're seeing with our trade on Apple right now. So, all right, guys, that's it for today. We have a lot of recording today. 2 p.m. Everything Money subscriber only live stream. Can't wait to see you guys there. Book club tomorrow, 10 a.m. Eastern time. Me and Paul are going to do chapters 3 and 4 of The Psychology of Money, and we will see you guys there. So you guys have a wonderful day, and I will catch you on the flippity flap.